We're going to be doing Wealth Wednesdays a little bit different today. On top of everything else, we got a webinar breaking down the basics of everything that we talk about, getting started with the stocks, the crypto, the reading the charts, the candlesticks, all the stuff. First and foremost, man, how you feeling?
I'm feeling good. It's July 1st, man. It's the first of the month, man.
That is.
Can't complain. You know we getting started always top tier beginning of the month. And April 1st, we dropped that product. That was 2-3 months ago, man. We on a steady roll. That was 2 months ago. No. 7th month. That was 3 months ago.
Man. We 7 months in. Hope you guys been taking advantage of every month, every day, every week,
every hour.
And keep compounding them that work that you're putting in, man. That work that you're putting in. I'm feeling good too, man. I'm feeling
How you
good.
How you feeling?
July 1st. I'm feeling good, man. Just like any other week, man. The markets have been just like any other week. I've been feeling good, but this week the market's been moving. You know, the last couple of weeks we've been getting a lot of good news in the market, man. A lot of good stuff. So I got a few things to talk about before we get into the charts and all the stuff. But I also wanted to just see how. I haven't looked at the stock market since about 7 this morning, so I wanted to see what happened and what may be new today going in so far. So we're gonna look on CNBC real quick. Right here, Dow rises to fresh record to start July. Nasdaq struggles as chip makers decline. Let me actually move this up to get us right with that. Nasdaq shed about 0.5% as investors dumped semiconductors names, taking profit after the swath of stocks surged more than 80% in the first half of 2026. They plunged 9%, although it was still up around 250% in year-to-date. SanDisk shed 10%, losing some steam after gaining more than 850% in the first half of the year. Nvidia and Broadcom also fell roughly 1 and 2%. So the chip makers, as you can see, they've been running this whole year, 250 for 80%. Swap stocks surged more than 80% in the first half of 2026. Micron plunged 9%, although Micron up 250% year to date. SanDisk shed 10%, losing some steam after gaining more than 850%. How do you feel about these memory companies, man? What you got to say about it?
These are insane returns, especially coming from chip makers, man. 8x on your money, on your initial investment is crazy, and we're only 7 months in the year. Micron definitely has been doing crazy numbers, man. I think they had hit $1,000. They were already worth $1,000, but
yeah, I think Micron's at like 1,300 right now.
Yeah, that's crazy, man. Yeah, that is wild. So
so these memory companies.
Yeah.
For the people who don't know, you know, there's layers to AI, and memory is one of those key layers, right? So you got. I don't think I can remember the layers off the top of my head.
There's like 7 of them.
Yeah, there's like 7 layers, and memory is one of those key layers that make up the whole thing. Really, you can't really have the top processors without memory, and you can't really have the compute without the memory. So, looking at the layers of AI, and this is just the beginning of AI, you get to see where the money's flowing to. Right, we started with those when AI first came out. Those tech companies, right? The ones that we know, Meta, Google, Amazon, right? Nvidia, right? That was the processors, the GPUs, and the semiconductors. But then you got the memories, the memory chips, and the semiconductor chips. Now these memory companies is taking off, right? So the layers is going, and you know that next layer that I believe is coming that most people haven't thought about is that cybersecurity, that security layer, right? There's actually an ETF that I'm gonna talk about soon. I'll put it in the Discord soon. That tracks the top cybersecurity companies, but with the layers of AI, you get to see where the money's flowing to with these different companies next. You got anything to say before we continue reading?
Let's do it.
Let's do it. The great rotation trade persists into the third quarter as the blue boring names of the Dow Jones continue to attract inflows directly from recent profit taking money from tech stocks. Founder of CEO of KKM Financial told CNBC this is extremely healthy and underscores a broadening breadth of equities for this continued bull market in its fourth year. Emphasizing the importance of diversifying your portfolio, right? If you like I just mentioned, tech will run up. They'll take their money that just ran up from tech and rotate it into other companies and other sectors. going into the Dow Jones that makes up of those prominent industrial companies, sector rotation is important, which is why it's important. That's why we emphasize that ETF. Grab you them ETFs, man. Meta actually today ended up moving up. I don't know if the news actually came out on CNBC, but Meta gapped up like crazy overnight. And we opened up from closing at 564 yesterday, opening up at 616 today with a high of 630. And let's see if the news is here. So now it's here. Meta builds Meta Compute and Cloud to sell excess AI compute, and they struck deals with Google, CoreWeave, and Oracle, and that made the shares jump, right? So Meta has excess in compute, and compute is the race right now. You know what I'm saying? They said they're really going to sell their compute to other companies because they have the extra, which is more capital to help offset all the money that they're spending on the AI. How you feel about Meta selling the compute, man?
Yeah, I think that's a good move, especially having was that SpaceX adopt that they're the first company to do that. So now we're kind of I wouldn't say that it's a pattern, but this is just the second time that we've seen it. And yeah, I seen that this morning that they're getting rid of all the AI that they don't use, and storing it into a cloud. I think that it's kind of like a parachute, you know what I'm saying, and have like a safety net, and having security with what they're doing.
Yeah, money coming in all different type of ways.
Yep.
Because a lot of people they've been shunning all these companies for spending so much money on AI, but this is a way for them to get that revenue back because everybody's spending money on AI.
Yeah.
So emphasizing the importance of dollar cost averaging. We've been talking about Meta, talking about dollar cost averaging and buying at the dip. Meta is a company that came from an all-time high of 800, and now we're in the low 600s, even hit a low of 500 in the 500 range, right? Being able to buy in these dips and buy in these areas, you'll be benefiting from this whole area up here, right? So just clear example of buying a dip. Meta is in the full circle wealth portfolio, and this has been the stock that I have emphasized most all year. I'll be transparent and say this is what I hold the most in. So let's see what Meta do, man. Let's see if we can hold this because Meta been fluctuating, that resistance at the price of 640 around. So if we end up getting up there, let's see if we can get above it and end up moving up even higher. If not, hey, we'll just see, man. We'll just see. I think that was mostly it for the CNBC and what's going on in the markets right now. You got anything before we want to hop into the SPY charts?
No, let's do it.
So look, let's do it. Let's hop into the SPY charts, man. Right here, we got all-time high at the price of 758. We were in this range. If I go, we make that green. If I go to the hour time frame, we were in this range the last few days between that 730 and 740. And we just broke out of it yesterday. So yesterday, mark that too. We just rejected from here. Anyways, right here, classic support resistance. Market was in this box between 740 and 730. Last week, we ended up having a breakout to the downside, a fake breakout to the low of 726, but then came right back up into this range. We've been keeping up to date with it in the Discord, so if you've been watching the Discord, you know what's been going on. Yesterday, or actually Sunday, I ended up saying that, hey, we ended up closing Friday at 731. I want to see what happens. I want to see us test this level. Do we bounce off this level? On Monday, ended up moving all the way up to the upside of 739. Then coming back down to the downside that morning, and then ended up going up and breaking out today and continuing the breakout. So market is moving back up towards those all-time highs, possibly to 758. We're $10 away, so we'll see whether or not we're going to continue to the upside. I want to see us retest that level of 740 that we broke out of. We'll see whether that happens or not. We just ended up running up today and rejecting off of and didn't get above that 750 level. So if we can get it up above 750, I see us getting to 758. But if we stay below that, we got to test that 740 level and see what happens then. What you thinking, man? You think this is a real breakout? You think market's gonna stay above, or you think we gonna lag a little bit and pull back?
Definitely gonna lag, as well as that headline that was on CNBC. We had Kevin Marsh saying that he declined to talk about the interest rates going up or down. I think that we're having the I think that we'll have some sort of retest before it's solidified either in either direction, either up or down. You know what I'm saying? I think that we'll definitely have this retest at this level. Today was a good day. You know, we still got 2 more days of the week. You know, usually on Fridays they be playing on Fridays. Man,
and we actually only have, I think it's a short week because of the July 4th.
So 4th is on Saturday.
But I actually, let's look it up, because I was watching some video and I think it was still a short week in the market. So yeah, we close on Thursday. So stocks will be closed on Friday. So we got a short week in the market. So tomorrow's gonna be the last day, and we'll see whether or not we slide tomorrow, or we might have some. Man, definitely have some profits taken tomorrow. So you can expect us to retest this level. Friday, Saturday, Sunday happens, and over the weekend we will see what happens with Trump talking about his talks with Iran and the war and whatever happens, because over the weekend something always happens. Speaking of that, on Monday, Iran and U.S., this ended up causing the stock market to end up moving to that upside and ended up having us gap up that morning. Iran and USA said they were going to schedule another meeting for Tuesday. They ended up speaking yesterday, which caused the momentum to even continue. And they ended up talking over the clashes that happened over the weekend. So how you feel about that?
I did not hear about that. I'm not gonna lie.
Yeah. So that was literally the momentum for Monday. So let's see whether or not that holds. But just last week, I believe we were talking about how they ended up meeting for, they call it a memorandum or something like that, and it's like ended up having a meeting, right? And they ended up coming to the conclusion that they're going to have a ceasefire. They're going to halt the attacks, right? And that ended up causing the market to go up. But then at some point over the weekend, Trump says some other stuff. I guess we ended up attacking them last week or something like that. Ended up attacking Iran, sending some more missiles at them. And
I think it was
Israel, one of them guys, and he was basically saying if one of them guys do not stand down, we're gonna continue to go. So it was some more negative stuff. But then this week we turn around and happen to have some more positive stuff. It's just a pattern, if I really, let's see if it holds with what he's saying. But if we go to the daily chart and remove this stuff, right, all-time high at the price of 758, and then you have where we're failing to get below at 720. With everything that he's been saying the past, since May 26th, it's been all with that war. Okay, we'll have some good news, then some bad news, some good news, then some bad news. So we'll see what happens, man. But at the end of the day, emphasizing you got to take advantage of these dips, because anytime we end up getting a low, you can see that the market moves in a cycle. We don't want to stay down forever. So even if we do break below, you got to take advantage, because the market is obviously going back up at some point. So you got to remove that fear. You got anything to say about that?
Low key, I think that reclaiming my statement, what I had just said, we had this liquidity grab right here. And so on the chart, it looks like it points out, right? It's like a sore thumb right here. And so, and I think that once we went below this, below 5% from all-time highs, we had to, that was the retest, right? It wasn't, well, obviously it's a liquidity grab, right? But what I'm saying is we might not be going down. I think that might be that was the catalyst there. And that was just on, I think that was like Friday, right? That was last week. So for us to be where we are now from where that was, I think that we might see a run up for the next for tomorrow and then possibly. I mean, well, news still has to come out, but next week there's no telling where we'll be.
Yeah.
Right, we might be inching up closer to those all-time highs or just around that range, but I don't see us going too much further because that liquidity was just grabbed there. It was already there. That is they grabbed that.
I feel you, man. And speaking of maybe not even going down and possibly even going higher, yesterday markets also went higher because we had some news come out saying yesterday was the last day of the second quarter, and S&P 500 and NAS 100 had the best first half of the year since 2020.
Yeah, see?
So that's something to keep in mind as well.
A little bit of hype there.
Yeah, for sure. So, you got these markets having the best first half of the year since 2020.
While interest is staying the same too.
Right. We got
crazy.
We got, that's important too. Like as inflation rises during these moments when interest rates are, higher for longer, people like to put their money into the market, right? People go to run to them assets when inflation rises because that's how you beat inflation, right? If your dollar is becoming if your dollar is decreasing in value, you put your dollar somewhere where it's increasing in value. America built the whole system around, hey, we're gonna take this dollar and we're gonna make it out of thin air, but we're gonna put it into things that's gonna grow over time. Hence the stock market. So anybody who still has that fear, and if you've been fearful for the first 6 months and still, hearing all the stuff about the market and still haven't taken advantage, first half of the year since 2020 has the best first half of the year. So markets are moving, having a great first half. Tuesday, we also had the tech companies recovered, right? You had all those companies, Apple, Nvidia, even Nvidia's down right now at 200. They're at a good spot right now. If you guys got $200, not financial advice, but taking advantage of these dips on these top tech companies, man. They dipped and they came right back up. You got Apple, then dipped, now it's back up, right? Amazon, then dipped, moving back up to the upside, retesting them levels that they broke out of. So let's see whether or not they hold when going back up to the upside. But either way, when they don't, get these companies at these prices at a discount, because no matter what, you're still going to be spending money with these companies. It's kind of backwards for you to continuously spend money with Amazon, continuously spend money with Apple, and you don't want to own the stock or take the time to own the stock, right? Or even think that this is a company that's not valuable enough to own. You're going to be giving them your dollar anyway. What's your thoughts on that?
You said it perfectly, man. You already use Amazon, every day. Netflix, all these companies.
We was actually off camera. We was talking about Netflix earlier. Netflix ended up moving up to the upside. Talk about Netflix. That's one of your favorite stocks on the market, rightfully so.
Right, man. We've been talking about Netflix since before they were doing the split, man. It was like $1,200 a share, right? They did the 10-1 split back in, what was that, like January, February?
Let's see right here.
November. Damn. See, we've been talking about Netflix for months. So now Netflix, after they did the split, man, anything under $100 Netflix, I feel like is a great buy, man. And now we're at $74. We got all this upside to grow from, what is this, all-time high from this year?
Yeah.
All-time high from this year back in April, which is $110. Yeah, we at $74 a share right now, man. Netflix is at a prime time buy.
46% discount.
Yep.
Right, we call it discount because you probably still got a Netflix subscription. If not, your mama's still paying for it. If not, your grandma's still paying for it. If not, you either got a girl on the side that you just talking to for a Netflix account, or your girl got a Netflix account.
Come on now.
You know what I'm saying? Money is still flowing into this company, and you got to think, is Netflix going to be around still 10 years from now, 20 years from now? I mean, Netflix was the first to have these, to be the streamer service. They beat out Hulu. They beat out Tubi. They ain't even Tubi trying to be Netflix.
Right.
So they're the Apple of this space. They're the Amazon of that space. They're the
trying to tackle Paramount. You know what I'm saying?
There you go.
They're trying to get into spaces that they haven't been before. So.
Exactly. You got Paramount, HBO, Disney Plus. These guys are trying to follow what Netflix already started. They took the customers away from them.
Yep.
So Netflix at $75, $74. Tomorrow's gonna be Friday. We're coming up on 4th of July. You probably got 500 planned to blow.
Fireworks, whatever.
$100,
$200, whatever you need to do, man.
You don't even remember what you bought last year for the 4th of July. You
real.
don't even remember
for
what you bought last year. So actually, there's some Netflix
Meat
news
for the
here.
grill.
So Netflix said director Carl, I don't know how to pronounce his last name, was sentenced to 30 months for defrauding the company of $11 million, misdirecting profits, misdirecting project funds into stock options and cryptocurrencies, including Dogecoin. So he was stealing money and going to invest that money.
I mean, at least it was for a good cause. He wouldn't have to, you know what I'm saying?
Then they talking about 30 months. Like,
crazy.
That's
almost 3 years.
That's almost 3 years. And he might really do 1.5, 2.
Yeah.
You know what I'm saying? And then he gets out to a whole bunch of M's anyway.
Right. Ain't nothing but a little bit of straightening.
Ain't nothing but a little bit of straightening. That's been caused. But Netflix been in a downtrend, man. They're at a prominent low
3 months
for the last few months. But this is what stocks do after they split typically. So do not let this. Don't let this fake you out, man. If you got $75, get you some Netflix, man. Get you some Netflix. SpaceX added into the NAS 100. SpaceX acquired by the indexes and ETFs. One of the ETFs I like is VTI. That's in SpaceX is in VTI as well. So SpaceX has been added to the NAS 100.
What that chart looking like?
For what?
The SpaceX.
Let's see what's up. Let's see what's up.
Ooh.
Damn. We're at 157 right here.
Right around where we IPO'd at, or were they IPO'd at, man?
Let's just say we get in 20% from the IPO, right? That would be a 125 price target.
This ain't your average company. Yeah.
That would be a 125 price target. And then because it's an IPO, let's say we even get to 100. Because it's an IPO, it's one of them. It's not a smaller cap company, but it's a newer company on the market. Let's say we do $100. That's a 35% decrease from where we're at. I'm at the point really where when this lockup period is over, right? Because we got the shares being released as they go for these private investors. And after a year or 6 months after that lockup period, I'm trying to see where that price is at. And that will make me more comfortable buying the stock, because then I know that, hey, you'll get manipulation from the stock market anyway. But with these private investors, their shares will be unlocked, the profits will be taken, things will settle down, and it'll just be a stock on the stock market instead of goddamn SpaceX, And when it's at that point, I feel more comfortable buying. Really, no, I wouldn't say regardless of where the price is at, but back 6 months to 6 months to a year, that's when I'll look back at this and really consider adding to my position. But no matter what, like Flash said, this is a great prominent company. I'm gonna add this to my position.
Yeah, generational wealth right here, man. SpaceX is doing something that no company has ever done before. So personally, we all know what's going on at SpaceX headquarters, right? They do have a lot of private investors that are definitely looking to sell after this lockup period. But I think the way that they're going to play it is that, like, a lot of the employees that probably hold a good amount of the shares, let's say like 10% or whatever, I don't know. But I don't think that I think that a lot of the selling is going to come from those private investors instead of the employees, because the employees, they've been there since like 2002, right? So whenever their packages, whatever their packages are looking like, I don't think that it'll be. I don't know if we'll get down to 35%, but I definitely see $125 SpaceX. I think that is very possible. That was only 20%.
Yeah,
I think that I think $100 SpaceX would be. If we were to ever get there, it would not be for weeks. maybe even
No,
1 week,
no,
or
of
you know what I'm
course
saying.
not, nah.
It would be within a session. We go down and touch that real quick on some extreme, because $100 they wouldn't. That's too much of a money grab. That's too easy for retail to get in. It's $100, right? I don't think that too many people would. And we have to pay the premium, right? So, yeah, $100 SpaceX. It really does sound good.
I think it's plausible, honestly. I think it's possible. Because you got, so thinking about how big the market caps of Nvidia and Netflix already are, they ended up having a split and causing them their stocks to be less than $100 at some point. So it'll be, like you said, I don't think it'll be there for long, for sure. But given the market cap of what SpaceX already released at in the high trillions, a lot of profit will be taken. And with this being a company that's newer, I forgot what I was gonna look up. But nah, I think yeah, I think it's unlikely, but there could be a chance that we reach that given the market cap. I wanted to look up IPOs. Yeah. All right, damn. I was trying to find the Magnificent Seven returns from when they released to now, emphasizing, what Flash was saying about generational wealth being made on SpaceX. When it comes down to the stock market in general, holding is what gives you the best results, but especially when it comes down to IPOs. You want to hold for generations. Thinking back to Apple, Microsoft, Amazon, Nvidia, I mean, you can read it off for us, brother. The percentage and the return since they IPO'd.
Yeah, Apple returned over 140,000 since its public debut in 1980. Microsoft 350,000 since their IPO in '86. Amazon 230,000 in '97. Nvidia 120,000 in 1999. Google/Alphabet 7,000 since 2004. Meta 1,300 since 2012, and Tesla 20,000 since 2010. These are insane returns, as well as Tesla already being up 20,000% in 16 years, right? Tesla kind of had the same type of, it's the same person, right? So Elon had the same type of launch when it came to the way that he did his companies. It was all around the hype, you know what I'm saying? It was all based on the hype, and he was kind of selling a dream that sounded so good that it drove Tesla all the way up to damn near $500, you know what I'm saying? So I think that these type of numbers is crazy. Hold on, actually. Let me read this up top. The Magnificent Seven have generated extraordinary multi-decade returns since the respective IPOs, surging from small cap market debuts to multi-trillion-dollar behemoths. However, facing increased AI spending scrutiny, they shed $2.3 trillion in June as capital rotates into massive IPOs like SpaceX. Damn. So this collection of companies lost $2.3 trillion to get into SpaceX. That's what it says. I don't know how true that is.
I know they shed 2.3 trillion. I mean, I don't know if it's saying they used that specific 2.3 trillion to put into SpaceX, but I know a lot of money was sold during these times to to get into some companies. So emphasizing SpaceX, getting it at whatever you get it at, hold it for generations and generations, because those are the type of returns that you get on quality companies that you hold for generations.
No cap, man. What the most was it 300,000 $350,000
from Microsoft.
Come, that is crazy, man.
Right.
And you know what the Gates founder. Come on now. Oh my gosh. It really goes to show where we are in the market, man. Anything under IPO, SpaceX, man, is extraordinary because of where this is gonna go in the future, man. Valuated at $1 trillion. I think their market cap is somewhere up there too. Official Go Getter has searched up America's GDP and what Mag 7 adds to it. It says as the summer of 2026, the United States nominal gross domestic product is pacing at an annualized rate of 32.4 trillion, while the Magnificent Seven companies generated combined revenue that directly equates to about 8% of it. Understanding how the Mag 7 interact with the U.S. economy requires separating a company's market value from its direct contribution to economic output. Man, so the Mag 7 is doing so many wonders for our economy that like it's getting to the point where our overall well-being as a society is growing because of these companies, as we can see, right? I don't want to tie specifically to the things that we need, like gas, groceries, and things like that. But those are very small factors, but it all plays a part into the way that our economy looks, moves, and like keeps itself up. You know what I'm saying? Everybody uses all the Mag 7 in some way, shape, or form. You use at least one of them. So that is crazy. That's extremely important. You use at least one of them.
You use one of them, and that's why we emphasize buying the Magnificent Seven. And for the people who don't know, you got in the Magnificent Seven is that Tesla, Amazon, Apple, Google, Nvidia, Microsoft. I'm missing one. Microsoft, Meta. I don't know if I said Meta, maybe not, but maybe I'm missing one. But in the GDP is, as it says here, the total value of all goods and services produced in the U.S. Right, and it sits at a total of 32.8 trillion. And then you have, you got the Magnificent Seven, all the companies we just mentioned, contributing to 8.1% of that 32.8 trillion.
Hey Siri, what is 8% of 32 trillion?
8% times 3.2 times 10 to the 13th power is 2.56 times 10 to the 12th power.
Okay. Thank you, Siri.
Man.
So I think that's what, 200 billion? 8% of I think that's what that is. I think that's what she said.
Yeah.
That's crazy. As well as our debt being somewhere around this number too. I think we're in debt like 36 trillion. That's insane. Yeah, please.
But these are the companies you want to emphasize, man. You want to emphasize
what the fuck is that? Nah, thank you, Siri. Siri's so ass. Apple, get Siri up. Go ahead, my fault.
I don't even know what number this is. You guys ain't telling me the number this is.
Okay.
Drop it in the comments if you know what number this is, man.
I think that's because that's not billion. It would have said billion. Maybe it's trillion. Maybe it's 2.5 trillion. 8%.
You want to emphasize the companies that add to the makeup of our economy, adding money into our economy.
Cool. Yeah, 2.5 trillion. Fuck. 2.5 trillion, man. They own they contribute, and yeah, they contribute 2.5 to our overall 32.3. I think that is insane. Let one of these companies fail, right? Who's the I guess the smaller out of the bunch, right? Let's who's the smaller out of the bunch?
Out of that bunch, who is that smaller out of the bunch?
Would that be Apple?
Hell nah. I would say okay, as far as the least market cap is Tesla.
But price too though.
You talking about smallest is in price? Like what cost the least and on the stock market? Or smallest? market cap company, smallest
Yeah.
growth to the GDP.
Low key, Tesla. I forgot what I was gonna say though. One of those smaller companies, what not smaller, one of these companies fell. The other 6 is picking it up, you know what I'm saying, and dragging the weight. Insane. It's crazy that seven companies control so much of our economy that it's hard to not even like imagine not knowing that, and just subconsciously you're just using these apps and not even knowing or like even taking the time to look into these companies because they control so much of what you use every day.
Yeah, like
that's crazy.
You talking about just going day to day and not even taking the time to realize who's behind this, what's going on, and what's their reasoning. You know, like these companies, that's why the stock market is such a beautiful place because they're trying to control us, and we can control ourselves and benefit off the fact that they're trying to control us by controlling our own selves and putting our money into the stock market. You know what I'm saying? Putting our money into other places where we can get on the other side. That's what Flash was saying. Our country, our world is controlled by these 7 companies, right? Without these 7 companies, our world looks drastically different. Without Amazon, without Apple, without Microsoft, none of this would be happening right now.
Right.
Honestly. And oligarchy was a word that I learned a long time ago talking about what we're talking about. Oligarchy defined as a form of government or power structure where a small group of people hold all the political and economic control. And that's the world that we live in. You know, America is an oligarchy, right? In the modern context, while rarely used as an official name for government today, political scientists often use oligarchy to describe countries where a small group of billionaires, politicians, or military generals hold absolute influence behind the scenes, regardless of whether the country claims to be a democracy.
And that's where we live, man. This is where we live, man. It gets to the point where it's so much of an oligarchy that they try to like things like midterms and things like that. You know what I'm saying? We got inaugurations and shit like that. Things that mask and literally put a blanket over this type of place that we live. Because now, question, think about this real quick. What was it looking like 1980? Microsoft is the main company booming right now. 1980, we got, what was it, Google that came right after that? It was 1999, I think Google came. What was it like for Microsoft to be, they probably wasn't they weren't $1 trillion company, but I would assume that it was at least hundreds of millions, right? We're kind of up there. We're seeing a lot of money being flowed into Microsoft. We have 7 companies that control our economy now. What was it like when it was one or two companies that, you know what I'm saying, maybe they didn't have the same impact, but think that's another thing because the dollar wasn't the same. The purchasing power of $1 was probably a lot more wholesome in 1987 or what it was, 86. So that's crazy time, man. What was that like?
And that's something we can look up too. Yeah, well, what companies ran then the way these companies do now.
That's crazy.
But before we move forward, I wanted to ask what you would never mind. I misunderstood what it was saying. I was going to ask something about the common types. I was going to ask which one you would prefer, but they're all oligarchies.
Yeah.
So I thought it was common types of different ways the world or your government may be ran, but this is just all different types of how it's controlled. You know, oligarchy.
Plutocracy. I've never heard of that before.
Yeah.
I've heard of this one though.
By the how you say it?
Aristocracy. Ruled by hereditary landed elite or noble families. Man, that's like Britain and them over there. That's like Canada.
Yeah, for sure.
You know, they got the British pound on their dollar. Canada.
Small committee of military leaders. What's that shit in Africa or some shit?
Man, I feel like that would be the most important, or the best if you don't got a corrupt. Let's call him a general, right? I think that Junta.
Ruled by a small committee of military leaders. Yeah. Yeah, at least the military leaders they might have some better principles.
This is where we really are for real. Because what Bill Gates and them gonna do?
Self-perpetuation. The ruling elite usually passes its
Donald
power
Trump.
down to its children or select peers. Yeah, man. Man, this is the world we live in, man. And the more you understand the stock market, the crypto market, the financial markets in general, the more you understand that where we live at, you know, and the more you realize that's really all that matters.
Yeah.
Like these billionaires and these big money players, they don't care about nothing else but this market. So, because and everything that we do in our day-to-day lives has to do with this market. It all connects back to this market. Oh, inflation's high, the market. Oh, inflation's low, the market. Or whatever, the market.
Right.
Trump said this, the market.
And as a people, right, I want the full circle wealth, man. The main goal is to get you out of that box thinking about only the groceries being high and the gas being high. You got to really take that. So also, what we did at the beginning of this Wealth Wednesdays was first we started with the fundamentals, then we moved to the charts and we seen the technical analysis. We full circle want to get you out of that box where you can actually see something, a headline, dig into it, look it up, figure out what moved the market, how it moved the market, and what you can do to position yourself to be in a better position in the future. You got to take yourself out of that small box and not thinking about gas at being $7, right? Understand the why behind it. Understand how important it is for you to have that knowledge in your back pocket and keep that in your mind as you go through your day-to-day. You know what I'm saying? Getting through the you know what I'm saying, the year that maybe that small freight, that small term of, let's call it turmoil. Yeah, man, understanding how to get through that and navigate, reading the charts, looking at the charts, getting better at both fundamental and technical analysis, both top tier. And if you don't know, that is the structure of every show, every week. We going through fundamental and technical analysis, looking at companies, looking at what they did for the day. We're in the middle of the week every Wednesday, so we look at the first 2 days, figure out what we're going for the remaining 2, or I guess the 3. Figure out what we're doing for the next 2 days. And capitalize off of those week by week. We go week by week, man. We're 7 months in the year. We ain't got nothing but time to understand and learn. As well as the midterms. We didn't even low-key talk about that. When is the midterms? Hey Siri. When is the U.S. midterm?
2026 United States elections is on Tuesday, November 3rd.
November, damn. I thought it was a lot closer than that, but yes, sir. Let me see. All seats. Okay. So this is why this is important. I see a lot of the times where a lot of the seats here, House of Reps, is usually more Republican. You know what I'm saying? All of the seats are up for election. I didn't know that. I wasn't aware of that. I thought it was, yeah. As well as 39 state and territorial governor seats are on the ballot. So we're having kind of like a real shift. The Senate is staying low-key the same at about 35% of the seats. But yeah, cool. I just wanted to, that's fire.
Yeah, stay tuned for when this happens. Flash will break down midterm elections, man.
Okay.
I don't know nothing about the political party stuff, man. I'm gonna have to learn with y'all that day. You want to hop into Bitcoin a little bit before we get into the webinar? How you feeling?
Yeah, let's hop into Bitcoin, man. Let me see. Getting into it. We still rolling?
Yeah.
We still rolling. How much time we got?
50 minutes.
50 minutes. Cool. Bitcoin chart. Let's go on a weekly. Space it out just a little bit, man. Doing our technical analysis. We're starting from all-time highs up here. Let's make it green. And then this is from last year in October. So let's look at this year alone. this year alone, this is our all-time highs here. I'm gonna mark that blue. All-time high this year. And this is our all-time low, which we are currently sitting at. Oh, that was weird. Currently sitting at here. I'm gonna mark this red. Now, as you can see, we are in a steady decline from all-time highs, which is here at the beginning of the year. With places to look at primarily about right here, we had this zone. I'm gonna turn it white. We have this zone here that's prominent. We touched that multiple times, man. About right here as well. Multiple rejections around this level. Maybe let's go in a little bit closer to try to find a smaller range. It's kind of real jam packed together, but price is sitting at 60,000 currently. Let me go back. Currently, we were sitting at this range here, right? We're sitting around here. Let me go to the 4 hour. It looks a little bit cleaner. We're sitting around here. Not too much movement. There hasn't been too much going on in the crypto market. I had talked about it yesterday a little bit in Tuesday Takedown, that a class action lawsuit is being put against MicroStrategy, which they buy Bitcoin and leverage it to buy even more Bitcoin and use investor money to buy more Bitcoin. And so they have a class action lawsuit that is taken out on them because the same thing about how Netflix is doing it. Their CEO kind of like making sure that the investor money is being used in the right way. But Michael Saylor isn't indicted yet. He is the face of MicroStrategy, and so he has a class action lawsuit basically saying that, are you using the money the right way?
Yeah.
Right. And so that is something that is extremely important. We did just have a 4 hour run up though. About 3%, getting out of that $50,000, the higher 50,000 range, and crossing into this higher or lower 60,000 territory. I do want to look at the overall crypto market real quick, just to see that it is not Bitcoin season. Not Bitcoin season, but it is altcoin season, man. We got altcoins sitting at 50 for the indicator leading toward altcoins, man. If I go here, as you can see, there's multiple coins that have done numbers, man. I broke this down a little bit yesterday. Here we go. We got altcoins doing numbers. If you look at this chart here, this is just one of the ones. What happened? This is the one that's at the top. Let's bring this down here. Date and range. Right at the top. 2,400%, man. So that's a 24x, almost 25x. You see that this is just the top coin currently in the last 7 days. Let me go back. Last 7 days, this is the altcoin. Jumped from 0.07 all the way to $1.50. We got a lot of fear in the market right now. What is up with Bitcoin? What is up with the crypto market, man? Pump Fund is doing numbers as well. Like a lot of movement coming through for the crypto market. A couple weeks or last Wednesday or last Tuesday, we were at, I think, 2.1 trillion. And so 700 billion has inflowed into the crypto space in the last week. So there's a little bit of movement coming through, man. A little bit of movement coming through. I do want to actually, going back, XRP is at $1.06, man. That means if you had $1,000, I think the total price would be about let me see. If I wanted 1,000. Yeah, $1,060, man, for 1,000 XRP tokens. I think that is a very, not financial advice, I think that is a very great place to be when it comes to the amount of crypto or XRP that you have, 1,000 is a great place to start. If you had $1,000, now would be the perfect time to buy. They were lower than that. They hit $1.02. I think that was Saturday. Not even. What day was that? Nah, we're not too high. Anyway, XRP extremely low right now, as well as Flare. You know how I feel about the Flare, man. But that's it for the crypto market cap, or for the crypto space for real. That is pretty straightforward with that, man. XRP looking crazy. Portfolio looking crazy. But yes, we got a lot of attention on the chip makers, man, right now. So the crypto space ain't getting all the shine that it should be. And their time is coming. So right now, what I'm doing, I don't know what you're doing, but what I'm doing is accumulating while I can, because when this bubble pops, right, there's going to be a lot of money that flows into the crypto market. And I don't really know when that is. I'm not going to give you a time on when that is, but when it does, I guarantee that you'll be hearing about it, man. I remember when Bitcoin hit 126, that was the talk of the town every day.
Every day.
Every day that was on the news, right?
Yeah, so people who don't even care about it.
You feel me?
I'm talking about some Bitcoin.
So now imagine the other markets where there's not a lot of coins that people hear. It's a very small group compared to the large group that knows about Bitcoin, that knows about XRP and a lot of the other altcoins. So
yeah, you got XRP 250% from its all-time high, inching up close to $4. So you're at
250%. That's a 3x almost. 2.5.
You emphasize you buy them at the discounts, man. You gotta buy during the downtimes to benefit from the highs, man.
Yep.
With that being said, man, if you're done with the crypto space, we got the webinar, right? We got the webinar to help you guys get started, investing, all this stuff. So let's do it. Shout out to you guys for the ones who can stick through it, man. All right, bet.
Ooh. I was coming to see if you had any comments.
All right, so we got the Full Circle Wealth webinar, man. This is the beginner's blueprint to building the wealth, right? You guys watch us every week, and if you don't watch us every week, welcome. This is what this is for the people who are looking to get started. You're going to go from that consumer to owner, right? The person who just walks through the mall and spends their last dollar to the person who shops on the stock market and spends their last dollar. Hosted by yours truly, Go Getter.
And your boy, Flash.
Here at Full Circle Wealth. Brother, you can take over the first flash.
Let's
first slide.
Get it. It's your boy, Flash. And why we built Full Circle Wealth.
Oh, no, I was just talking. This is what we're covering today.
Oh, okay,
The next slide is why we built Full Circle Wealth.
I got you. So what we're going over is these 7 things right here. You're going to meet us just like you just did. What is crypto? What is the stock market? The platforms to use, ETFs, what ETFs are, and dollar cost averaging and how that can help you, how to pick stocks and how to pick crypto, and what is happening in the markets right now, man. Getting straight
into it, man. Let's get into it, man. Oh, it's us. Meet your host, man. So you got Go Getter, man. You know, co-founder of Full Circle Wealth. You know, I do the stocks and the investing, man. I prioritize that. Content creator, you can find us and find me at Official Go Getter on Instagram. Right, me and Flash building Full Circle Wealth from the ground up, just to make everyday people access investing more accessible to everyday people, however you want to do it. But we are here for you because we did the hard work. I'm just trying to make it easier for you guys because it can get a little complicated.
Exactly, and my name is Flash, man. I'm here to help on that very same mission, man, especially diving into other riskier assets like crypto and other riskier assets like that. So, yeah, man, we getting straight into it. Here to help you grow and understand the importance of getting into the markets and understand the different types of assets and where you could capitalize off of your capital and make it work for you. Ultimately, man, we getting to the point where our investments that we make in our younger ages can benefit us in our older ages, man. But it starts today, and that's what we are here for. And we're here to help you make it easier for you to understand and get in your bag, twin.
Get in your bag, man. Get in your bag. So, why we built Full Circle Wealth, right? Why we're here every week, why we post every day on the Instagram, why we post every day on the Discord, why we post every day on the YouTube. Why do we even do this?
Why?
You know what I'm saying?
Why do we do that?
Why is we doing that?
That is a good question.
And right here, off the rip, most people were never taught how real money works. And we built Full Circle Wealth to change that. We were never taught that. You were never taught how real money works. We never went to school being taught how real money works. So you were probably never taught how real money works, right? So it's for the everyday people, built for the working person who earns the money but has never been taught how to grow it, right? Going to work and working that job that 40 hours a week, even sometimes 60, maybe even 80 if you want to trade more time for that overtime. You know what I'm saying? All in that 1 week. But most people don't realize you can only trade so much time for money.
Yeah.
You can only do so much labor, right? And then I'm gonna touch on the consumer and the owner. And you can finish with the real education for
Yes,
it,
yes. So on top of getting that, what?
Nothing. I was just
On top of getting that, on top of it being for everyday people, right? Just like Official Go Getter was saying, we never got that real education, and so this is where we've done the hard part, and we're giving it to you and delivering it to you the easy way, man. Getting into the way that we do it for us, and using practical frameworks that we've created and structured so that it is applicable and accessible to every single person. It doesn't matter who you are, how you are, when you are. This will help you, and our structure can help you, and you can apply it to your life today. Everything that we do is they're very small things that need adjusting that make big impacts on our lives. So yeah. This is the place to be.
Yeah, that's the education, man. And from going from consumer to owner, right? Our real thesis and our main thesis here is stop buying things that make others rich and start owning assets that build your wealth, right? We put so much emphasis on buying the latest iPhone. We put so much emphasis on buying the latest clothes, the latest buying and spending money on Amazon, spending so much time with Meta, so much time with Google, Apple, like I just mentioned, Tesla, Microsoft. What are some other companies? You know, even Netflix, even Elf for the girls who like that makeup. You can buy Elf on the stock market, right? Nike. We spend so much time consuming these companies, but not realizing there's a whole nother marketplace on the other side where we can buy into these companies, a piece of ownership, something that we call a share that gives you a piece of ownership of these companies that you're already consuming. And going from that mindset from saying, okay, I'm just only gonna take this dollar and consume it, right, and let others consume it and give it to somebody else, and saying, hey, I could take this dollar and put it to work, so I don't have to work forever. Exactly. Because the more you end up in that consumption race, is the longer you have to continue to work, right?
Right, and that shift from consumer to owner is what we prioritize, man. So the consumer, he buys Jordan 1s and Nike wins, right? You stream music, you stream your favorite artists, right? Drake, Lil Wayne, Big Cheese, whoever it is. Spotify wins when you stream that music on there. When you buy a new iPhone, you get a new iPad, AirPod Maxes, Apple Watches, whatever it is, Apple product, they win because they take your money. McDonald's, you always getting the McDonald's fries and the Big Muffins every morning, man. McDonald's gonna win. You pay your rent on time every month as you should, but your landlord wins because he owns that property. But if you go to an owner aspect, owners have Nikes. You got the shoes, but you also got Nike stock, right? You got Spotify. You listen to Spotify, but you also own Spotify stock. Same for Apple, McDonald's, and you invest in the REITs.
Yeah, those are reinvestment, real estate investment trusts.
Yes.
Right. So you can invest into certain real estate companies that are getting paid through whatever real estate that they own.
Right.
Right. And
Airbnb
is a real estate company. They're not a REIT.
Okay.
But that's a great example. They're one of the few companies that still are in that real estate place that aren't a RE real estate investment trust. Airbnb, right? You love to take them trips, You love to get that 1,500 and get them taxes back, and you gonna say, I'm finna spend my last on this trip because I need to go to Costa Rica. I've been grinding all year.
You got to make that mindset.
You got to make that mindset shift. You're already spending all this money with Airbnb. You might as well, Airbnb is a great company. You get a great experience. Hey, let me go put some money in the Airbnb, right? Let me take 10% of my income and whatever I'm getting from the money that I want to go have fun with and put it up, right? Into this aspect of being an owner, right? Anything you want to say? Anything else you want to say about being an owner before we move forward, man? That's it. That's you, man.
Got you. Now we're talking about what is crypto. So crypto is a currency, is a digital currency secured by cryptography and recorded on a decentralized blockchain. I want to touch on this word right here, decentralized. When something is centralized, that means that there's an oversight by a government or a bank or some sort of entity where the crypto market and crypto itself is not centralized. It's decentralized, meaning that there's nobody that oversees it. Nobody's gonna look into your wallet and be like, hey, where'd you get this money from, right? This is what crypto is, right? And major cryptos or a public ledger no bank or single government controls. Top two cryptos that are listed here are Bitcoin and Ethereum. Now, I do want to emphasize that Bitcoin or cryptos do different things. While Bitcoin is the crypto coin, right? Ethereum is an altcoin. It's not Bitcoin. Touching on that here, there are thousands of other altcoins like Dogecoin, like Shiba Inu. I'm sure that a lot of people have heard about those. XRP, and my favorite, Flare, which are considered to be higher risk but higher reward. You get in while the price is extremely low, pennies, cents on the dollar, and expected, not saying that it does, but expected to go do thousands in return, right? 25x's. So while Bitcoin, this is the OG, this is the very first crypto, and there are, to give you a quick fact, there are only 21 million tokens mined for crypto or for Bitcoin, and it's the fixed supply. Sorry, and basically, what to make these two different cryptos here, what the main difference between the cryptos is that Bitcoin, the OG, is a store of value. So this is where you park your money, and this is where you put your. If you didn't want to have a high yield savings, if you didn't want to use a high yield savings or you didn't want to use your bank account, Bitcoin is a great place. Although the price fluctuates, you doing dollar cost averaging, what we'll be talking about later, is what puts you ahead of the game. While Ethereum, right, it's a programmable blockchain, and it utilizes smart contracts which allow transactions to go a lot smoother and faster, because on Bitcoin they run extremely slow. Bitcoin transactions can take up from 10 minutes minimum to 45 to an hour, not even max. It's probably even a little bit longer than that, depending on how much traffic there is. But Ethereum, they're pretty quick. Those transactions are pretty fast. They happen within a minute or two. And they specialize in DeFi and NFTs. Now, DeFi is decentralized finance. So that looks like if you were to say you wanted to get your paycheck through Ethereum, that is a place where you could have that happen to you. Decentralized finance. We already talked about what decentralized means. So finance, you getting money and things like that. Now NFTs, that stands for non-fungible tokens, which is to sum it up, it is a piece of data that is worth whatever I market to be out as. To simply put it like that. That's a bit advanced, but NFTs is something that you could hold for however long is yours, and it's based on how the market of the NFT is treated. So, lastly, key concepts: wallets, keys, gas fees, and decentralization. Wallet is where you hold all of your crypto. You cannot hold your wallet, your crypto on like your bank account. Not yet. Not yet. We are getting to that point, but we're not there currently. Now, the keys is the unlock and lock sequence to your wallet. So if you lose your keys to your wallet, you're cooked, right? You save your keys, you put them up somewhere, don't tell anybody, swallow the key, you'll be straight. Now, the gas fees is what I was talking about when it came to the speed. Because it takes so long for Bitcoin to run a transaction, the gas fees become a lot higher. So say you wanted to send one whole Bitcoin, you might have to, it might not, when the transaction lands, it might not be the whole Bitcoin. It may be like a couple $1,000s off because of the gas fees. But now Ethereum, it's a lot different because it doesn't cost that much to send the transaction through. Yeah, the gas fees are low, which allows smart contracts to be utilized and function the right way. We've already talked about decentralization, and I want to emphasize the last thing. If you don't have control of your keys, then you don't own your crypto. So when you open up when you create a wallet through whatever platform you use, always remember your password. Write it down somewhere where only you know where it is, because don't give me access to your keys. Don't give you this guy access to your keys, man. You know what I'm saying? Security is one of the most important parts when it comes to crypto. Now, owning the asset is one part, about 50%, but the security behind your keys and your assets is the second 50% of that. So that is crypto in a nutshell.
Bet. So now we got the stock market, right? We just ran through the crypto. Now let's go to the stock market, right? The stock market is a marketplace where buyers and sellers trade ownership stakes in publicly listed companies. When a company grows, so does your investment. Simple as that, right? Simple as that. You end up you're getting a piece of ownership, getting some shares in the company, and as it grows and moves up to the upside, say the stock's 100, like SpaceX, 150 right now, and as it grows as a company and gets to 300, you benefit and get that. So stocks, that's the ownership. Buying a share means you own a small piece of that company, right? We just talked about that. Apple, Meta, Google, Nike, doesn't matter. You own a small piece of those companies. The indexes. So you got the S&P 500, which is what we talk about every week. That's the SPY. That's the S&P 500. And that's the top 500 U.S. companies. Then you have the NASDAQ 100. We talked about that last week, actually. We ended up going through all these different indexes and explaining the benefits, the pros, the cons, and the origination of each index last week. So go ahead and refer to last week's Twitch Live or the YouTube to get that. But you have NASDAQ, the NASDAQ 100, the top 100 tech-driven companies. And it's an ETF and index based off of the tech. And Dow Jones, the 30 large industrial companies, right? That's the Dow Jones Industrial, right? And the longest standing out of all these three is the Dow Jones. This has been around the longest, right? If you want to get the exact dates, once again, refer to the video. So you got bull versus bear market, right? So this is where the terms get very specific. So when we say bull market or you hear bullish, that means prices are rising. Hence, a bull likes to strike upward, right? That's where it comes from. Then you hear bear market, right? If you hear bearish or we're in a bear market, that is meaning prices are falling. We're going red, right? And hence a bear strikes down. So a bull market, bear market, prices are falling 20% or more. 10% is what we call a correction. But when you get to prices falling 20% or more, that is you're definitely in bearish territory. Why it matters. Historically, the S&P 500 returns 10% per year, and that outpaces inflation and savings accounts, right? So when it comes down to inflation, right, one thing may be costing, we know that last 5 years, something that costed $100 is now $115, $120, right? Whatever the exact numbers may be. And that's inflation. And when it comes down to your bank account and a savings account, I like to use the shoebox analogy, right? If inflation is rising and the dollar is losing its value, and say you've kept $1,000 and you're saving in a shoebox, because that's equivalent to a savings account. It's basically just like having a shoebox because it's not doing anything. The banks give you no return on your money less than 1%. So if your money is sitting somewhere and it's not growing, shoebox, savings account, your closet, whatever, and inflation is rising, your dollar is losing value, right? So your $100 doesn't have the same power that it would 5 years ago, right? But if you invested and say you put money into the S&P 500 and say you consistently invest every year, and you just leave it there, each year your money will be growing with the S&P 500 and it will be outpacing inflation. Now you get even deeper and you go into cryptos, you go into knowing how to pick your own individual stocks and buying certain companies. That 10% per year, you can get to that being 20%, 50%, whatever it is. You can get it to just be much higher based off the skill of learning how to read the stock market and the crypto market.
Yeah. No.
The platforms you need to know. So I'll start and do the I'll start with the Robinhood. Well, all these you can do crypto on them as well. So Robinhood, right? Commission-free stock and ETF trading. You go ahead and look it up on the App Store. I love Robinhood. I love SoFi as well. These are actually the two that I use when it comes down to investing into stocks and crypto, honestly. I got crypto into Robinhood. SoFi, you can invest into crypto as well. I haven't bought any SoFi through crypto, but I have a checking account through SoFi. I got an option account through SoFi, and I invest into stocks through SoFi. So if you go to the App Store and you end up looking up Robinhood and SoFi, these are all-in-one financial platforms, right? You know, Robinhood started off as just a investment platform, but ventured into banking, savings, just banking in general. SoFi started off as just a banking, ventured into being a brokerage as well, and having you have the ability to invest, right? So those are the two platforms that I use to invest. And when it comes down to these two platforms, I'll let Flash take over.
Coinbase, primarily crypto, where you can. This was one of the first exchanges where you could get and purchase crypto on your phone legally. It's not like illegal, right? So you can. This is the most the most trusted U.S. crypto exchange where you could buy Bitcoin, you could buy Ethereum, and you could buy a lot of the altcoins that they have on their platform. Not all of the altcoins, but a lot of them. And the interface is extremely beginner friendly. It's very easy to use. A lot of people say that it's one of the easiest interfaces to use because it's so simple. Now, just like Fisher Go Getter said, you could buy crypto on both of these platforms, but this one is primarily crypto. You cannot. Actually, they just added to the point where you can trade perpetuals on Coinbase, but that is kind of advanced. But you can also trade crypto on Coinbase. Now, TradingView is where you would go and look at all of the asset classes, from stocks, from the cryptos to commodities to metals to industrial stuff, everything, anything that you would want to invest in is on TradingView. This is where the charts is, and this is where you would go in and make your analysis, your technical analysis, and see where you're getting in is good, where you will be dollar cost averaging. The go-to, the charting tool for reading supply and demand zones, support and resistance, and technical analysis.
This is TradingView.
This is TradingView.
You guys see us use this every single week. This is TradingView.
I will emphasize. You're good. Before you even look into any of these places, TradingView should be the first place and app and website that you go and utilize, because you want to know what you're getting into and look at the fundamentals of the fundamentals actually, and do your analysis on those assets first. So before you even look into any of the stocks, any of the cryptos, you need to look and see what they look like on the chart before you try to indulge. TradingView is your best friend. There's nobody more realer, no truer than TradingView.
Reading the market. So you got TradingView 101. So we just went over TradingView, and like Flash said, emphasizing looking at what you're investing, right? Before you even get to a point where you are buying a stock, get comfortable looking at the stocks, right? Get comfortable being able to know how to track your stocks, get in your cryptos, right? Because TradingView is your place, right? You can do that within the apps that they give you, but for that in-depth research and the people who want to take it a step further, TradingView is the way you want to go, right? So candlestick charts. I'm gonna start right here, or I'm gonna do candlestick and support and resistance, and you can touch on the supply and time frames. So candlestick charts. Each candle one time period of price action, right? Or sorry, each candle equals one time period of price action. A green equals price went up, red equals price went down, right? Each candle one time period of price action. That's going to be done in the time frames, but depending on what time frame you're in, you got the daily time frame. Each candle represents a day. You got the weekly time frame. Each candle represents a week. You got the 1 hour time frame. Each candle represents an hour, all the way down to 15, 5 minute, 1 minute, 30 minute, all these different time frames, and you can see exactly how price is moving at that specific time frame, right? And then you got support and resistance. This is what I love and what I use every week. This is what I use every single day and night to look at the stock market, right? This is the strategy that I use. You got support where price is the floor where buyers step in, right? And then you got the resistance equals the ceiling where sellers take over. So price support is what I like to say is where we're failing to get below. Once again, if you got price at $652 and you got support at $650, and then you have resistance at $655. Can you see? Can you make sure we can see the whiteboard on the brother? If I do this,
No, you can. You
All right,
got to move back though.
just gotta move back a little bit. So let's say this is just real quick. 655 is resistance.
Why don't you use the chart?
Just a different, just, 655 is resistance. And let's say 652 is the price that we're at, right? We're failing to get above 655. That's the resistance. We're at 652. We're failing to get below 650. So now price is in this box, right? And this puts us in a box. So now when we get to 655, I'm looking to see whether or not we break above it or we reject. Or when we get to 650, I'm looking to see whether or not we bounce off again and get below it. Or bounce off again and go back up to the upside or get below it. But until price breaks out of either of one of these prices, price is just stuck in a box. And that's how we gauge where price is at. And that's why I love looking at support and resistance, because you can put price in a box, you can gauge where it may be going to, and you can gauge where it may be going to next, and then make your moves based off of that. So that's it.
Bang, now we're getting into the supply and demand zones. This is how you are able to really get in where you would like. Now, you can you utilize the support and resistance to analyze where you see price is, and now supply and demand zones is where you actually get in and say either place that trade or that investment opportunity. So this is pretty much what they are, is the areas of heavy buying or heavy selling. And it says go-getter's primary tool for identifying accumulation entries.
That's the full circle wealth way. We both be using supply and demand zones.
Getting in there where we see there is a lot of just a lot of activity ultimately, right? A lot of movement into price ultimately.
Yeah, it's reaction zones, right?
Right.
You can look at support and resistance and supply and demand zones as where like reaction zones. When it comes down to looking at price and candlesticks, you want to see where this price is reacted from. I'm gonna let you finish it off.
Oh yeah, that's pretty much it. You also had touched on time frames pretty well. I'm gonna just read it though. Weekly and daily charts for long-term investing, just like you said, the 4 hour for the 4 hour and the 1 hour for active entries. And you start from the what we call this top-down analysis, where you start from the very top, which is the weekly time frame, and you make your way all the way down to the 5 minute or the 1 minute to get more accurate details of where you want to put in that investment or that trade. So yeah. You want to touch on anything?
Nah, that's just reading the market 101.
Bang. I can do this one.
ETFs and dollar cost averaging, man. So ETFs, man, those are the exchange traded funds, right? You've definitely heard us talk about ETFs before, but if you haven't, ETFs, when it comes down to investing, is going to be like your best friend, in my opinion, right? So one purchase equals instant diversification, right? And we kind of previously in this Wealth Wednesday talk about how important it is to diversify your portfolio, right? We talked about sector rotation. If you have a portfolio with the top 500 U.S. companies, right? And when technology is doing well, you get the benefit from that. But then when technology starts to not do so well and it rotates into the industrial sector, right, you still have industrial companies, so you still get the benefit from that, right? So it keeps your portfolio stable, right? And it's still going to grow over time. So the ETF that I like, one of them is VTI, right? This is by Vanguard Total Investment Market, I believe it stands for, something like that. But it's the entire U.S. stock market in one fund. So you got the top 500, you got the S&P 500, the top 500 companies, but then you have thousands of small cap companies, right? Smaller companies, and then it also weights the S&P 500, the tech companies a little bit different. So the same tech companies that you have into the S&P 500 will be in VTI, but there will be more invested into those tech companies in VTI, more emphasis on those tech companies in VTI. So that gives you a little bit more growth than VOO and SPY would. And that would be the S&P 500, the top 500 companies. So the difference between VOO and SPY, we look at SPY every day on the chart. The difference is only the companies who made the funds and the ETFs. So SPY is created by the company Standard & Poor, right? VOO is created by the company Vanguard. The people like Vanguard VOO a little bit more because they charge a little bit less to control it, right? SPY, they charge more than Vanguard to control the fund, which takes more out of your profits, right? So that's why people like to use VOO a little bit more. QQQ is what tracks the top 100 NASDAQ tech companies. We talked about the NAS 100. QQQ is the ETF that tracks those companies, right? So buying the ETF of QQQ, you're able to have a basket of all the top tech companies in one, right? So instead of worrying about, oh, should I buy Microsoft, Apple, Google, SpaceX, you can just buy this whole thing and own a percentage of all of them at one time. Lower risk than individual stocks, just like I just mentioned. And it's the perfect starting point for beginners. If you're somebody who's struggling, where do I start with? Flash, Go-Getter, where do I go? Man, I got all these companies in my mind. I love them all. I love Apple, Meta, Google. I don't know which one to choose. VTI, VOO, man, or QQQ. That's your way to go. Do your research. If not, join the Discord. Dollar cost averaging.
Getting into that, man, dollar cost averaging is something that everybody could utilize, and it'll change your life drastically from the moment that you begin it. Dollar cost averaging is the beginner's superpower. You can have this you can make investments on autopilot, and that would remove the emotion from investing. So therefore, you could have your money sitting in this account, say your bank account, and you can have one of those platforms that we use, Robinhood, SoFi, Coinbase, to take the money that you want to invest and put it into whatever you direct it to on autopilot. So therefore, you don't even need to see and oversee your trade or your investments, because you know that $20, $5, $50, $100,000 is coming out of the account every month or every week or every day, right? So while you're dollar cost averaging, you have the opportunity to buy more shares when the price is low, because while price is dipping, you're getting in every time. You get the notification or whatever the case is. You get the opportunity to buy more shares, and then when the price is running up, right, you have the opportunity to buy fewer shares when price is high, because you've been getting in on that dip so long that you're falling. You finally hit that valley at the bottom. Right now, price is coming up. You didn't stop investing because you're making money on those returns that you invest on the way down. You're still buying, but you're not putting as much as money. You're not putting as much capital into your investment. You might be buying $200 a week, right? But now that was on the way down, but price is moving up now. So now you may be bringing down your investment to about $50, right? $100, whatever the case is. And that over time smooths out the volatility, because you've gotten in so many places on the ups and the downs that instead of you being hella down in your account or hella up in your account, it stabilizes. So when over time, say you invest in 2024 prices is not 2026 prices. So if you were to be getting in and investing for 2 years, after some time, it's only growth. It's no longer, damn, I'm down 40, 50%, right? Especially investing into these ETFs, because these ETFs really ain't going down. They're really not 20,000 or 2024 prices. So that's why emphasizing on the ETFs is it's crucial. Individual stocks won't give you the returns that the ETF will, because you're parking your money in a basket, right? So now, it doesn't matter how much money you start with when it comes to dollar cost averaging. You can start as with little as $5 a day up to $25 a week, right? However you want to do it, but you getting in is the most important part. So that strategy that you use to dollar cost average is something that you need to come up with, where you're not over leveraging your account and over leveraging assets, because now you might got a little bit more than you got to spend, right? Or whatever the case is. You got to come up with that on your own. But dollar cost averaging is your best friend. That is what's going to help you outpace the market. I don't think that's the right word, but it'll help you stabilize.
Yeah,
it'll be a lot
help
more
you be
growth on the
help,
upside.
yeah, and it'll help you be consistent in the market. Yep. Sorry.
Yep. Start with what you have.
Yeah. Back to what Flash was saying. Starting with what you have. So $100 invested in S&P in 2000 equals over $600 today. So if you just invested $100 in the S&P in 2000, it would have grown without you doing anything to $600 today, and that's just one share. So let's say you had $1,000 during that time and bought 10 of those shares, right? So 10 shares at $100, and you let it grow from $1,000 to $100 to over $600 today for one share. $1,000 for 10, 100.
Yeah, 6 grand.
You got $6,000. So boom, the power of investing and just holding for the long term. $25 a week would be $1,300 a year, right? Something that you can do to get $25 a week is skip one DoorDash order a week, or just sacrifice a couple nights of eating out, right? $50 a week, $2,600 in a year. All you gotta do is cut one subscription, right? 2 coffee runs, or two days of spending time with friend, or one night of not going out, whatever it is. Cut one subscription and 2 of whatever else. $100 a month, that equals to $1,200 a year. You redirect one impulse purchase a month, right? Something I can think of is, prime example, your friends is probably, if you don't got the right friends that are around you, they're more than likely asking you to go do some stuff, to go spend some money on the weekends for whatever reason, right? You can easily say no once one of those weeks, or just say, nah, I'd rather just stay in for a weekend, whatever it is, depending on what your lifestyle is, and save that $100 and just put it up in there. I used to really build the habit. I could have $50 by Friday, and I wanted to invest, and I know I wanted to invest. So I'd put my 100 so I can only have 50 for the whole damn weekend and be broke the weekend, because when it comes down to the weekend, you can't pull your money out of the stock market, right? So I would put 100 on there on Thursday, Friday, and not have no money on the weekend, just so I could remove that impulse of spending that 100, right? Sometimes you gotta do that to build that investment account. Then $5 a day, that's less than a daily Starbucks, right? Which equals $1,825 a year. Flash, what you got for us? What examples do you think you might have for all this, and anything you might want to say about this slide?
Yeah, I like the fact that we're redirecting that one impulse purchase a month. That is the best way to go about that. Definitely get this number up from 1 to at least 10, because that you want that investment account, right? You want your investments to pay you in the future. You got to redirect more than one impulse. You know what I'm saying? As well as, you're not going to Starbucks every day. You got to have those sacrifices. So what I will say is, yes, you can start with $100, but you have to be ready and willing to sacrifice something. If that isn't emphasized, I would tell you right now, you're sacrificing DoorDash. You're sacrificing the Netflix and the 2 coffee runs per week, right? You're sacrificing that weekend fun, like Official Go Getter said. You're sacrificing Starbucks, eating Starbucks, whatever, every day, Bigfoot Java, right? Dutch Bros, whatever it is. You're spending less than $5 you're spending no money or little, sorry. you're directing your funds to investing, which could be $5 a day, instead of buying Dutch Bros, instead of going to Starbucks, Bigfoot Java, et cetera, et cetera. Now, I think the best way to go about this when it comes to finding your dollar cost average method is find a nice comfortable space where you break it down week by week. So $50 a month, that's $50 a week, 4 weeks in a month, that's $200 a month. I think that is a perfect I think that is a very beginner friendly approach to investing into the market, because you spend more than $50 on miscellaneous every day, right? Every other day. So $200 a month to your future, I think is exceptional amount of money for you to get started. Now, this is how you pick stocks and crypto. You just do like this. Yep. Okay. So invest in what you already use, right? Number one, that's the first thing. You got to think about what you have in your home. You got to think about what you have on. Think about what you use, et cetera, et cetera. Nike, Apple, Spotify, McDonald's. We eat there, use, listen to, wear all of these things. I know everybody got a piece of Nike in their closet. I know that a lot of people have an iPhone. We're recording this phone off an iPhone. Spotify, Apple Music, everybody listens to music. Imagine not waking up and slapping the tunes, man. McDonald's, you already know that these businesses are here, so this is where you would start. Now, then, I guess I'm gonna just do the top three and you do the bottom three to make it make sense. How about that? Then after that, you study the fundamentals. Is their revenue growing? Is this company profitable? Is this strong brand moat?
Yeah, moat, meaning does this brand have, what does this brand have that no other brand has? What is their edge?
Right, okay, what is their edge, right? Figuring out where this company is efficient at and in, and then getting in from there. Now you're looking for companies that have a long way to, you're looking at these companies in the long term. Microsoft, invented in like 1987, I think it was. They're still around today. Microsoft is in the AI spaces. They got Microsoft Teams and things like that. You got to look for companies in the long term. Now, 3, you got to use technical analysis for the timing on when you're getting into these assets. You got to use support and demand areas, utilizing TraderView, which is your best friend, to find the best entry prices, because that is where you will get those opportunities for you to dollar cost average and figure out your plan on how you're going to get into these assets and these classes.
Yes, sir. You got number 4, accumulate, don't gamble. So you build your position over time using dollar cost averaging, removing emotion. You got to think in years and not days. Back to what Flash was saying about studying the fundamentals. You want to look for companies building for the long term. So when you make this investment, you got to have your thesis, right? And you got to make the investment with, hey, do I think this company is going to be around 10 years from now, 20 years from now, right? At least very minimum 5 years from now. You got to be thinking like that. And thinking about the mindset of building your position over time, right? You don't got to just think about, I need to put 5K or wait till I have a whole boatload of money into the stock market at one time. No, when it came down to my Meta position, Meta is a more expensive stock. I didn't start with just $500, $600, $800. I built that up over time, dollar cost averaging, buying at many different prices, right? Removing my emotion. And the reason why I was okay with buying at the top, the middle, the low, right? At whatever time is because I'm thinking in years, not days, right? I'm giving Meta time, my investment time, to grow into the price and what it's supposed to be into, instead of thinking it needs to be what it is right now. For crypto, I'm gonna let you take over that one real quick.
For crypto.
Oh, however you feel about that, you know what I'm
saying?
Yeah.
Now, I remember I was telling you about what crypto is. There's different use cases for these cryptos. Now, Bitcoin is the store of value, where you could use this as kind of like your quote unquote your high yield savings account, even though that sometimes there's dips in prices. Usually Bitcoin only goes up. So Bitcoin is a good place to start, but that doesn't mean that is your your very first initial crypto investment. It doesn't have to be, right? There's a lot of opportunities where you can get a lot of bang for your buck. So you can get a crypto that's, less than a penny or whatever the case is. That could be your way of investing into the crypto. But Bitcoin is the prominent one. So
yeah. And speaking of Bitcoin, diversify across all asset classes. So you got ETFs that we talked about. You got individual stocks like Flash talked about Nike, Apple, Spotify. You got small crypto exposure, those altcoins Flash I talked about, right? You're balancing your assets, your risk across different asset classes. You're taking advantage of the stock market with the ETFs, right? That gives you that stable growth. Then you're taking advantage of the individual companies, which gives you that faster growth, right? That more riskier growth, but it's that growth, right? And then you even get into that small crypto exposure. You get a little bit of exposure to crypto, right? Gives you even more growth. You're exposed to another asset class for when the altcoin season happens. You're able to take advantage of that, right? You balance your risk across all asset classes. You never want to have all your eggs or your groceries in one bag or eggs in one basket. We know that saying, because if one egg falls, you still got the other 6 of them. If one bag ends up falling apart, you got the other one holding the groceries, man. And that's how you got to think when it comes down to the market. You got anything next? Tongue twist. Anything else? Tripping.
Yep.
What's happening in the markets right now? So, when it comes down to the stock market, I'm gonna talk about stocks and big story. After the S&P 500, the longest winning streak in years, tech stocks pulled back. AI names saw profit taking as capital rotated and value in defensive sectors. So that's what's happening in the market right now, as in June, right? July, we'll see what holds, right? But S&P 500 had a long winning streak over the last few months, over the last few weeks, right? And tech stocks pulled back. You saw those names: Meta, Google, Microsoft, right? We talked about that the last couple of weeks. And you saw profit taking after they ended up running up to all-time highs. Some of these stocks, you got Apple run up to all-time highs, Google run up to all-time highs, Amazon was even at the all-time highs. Those are 3 of the stocks that I know have pulled back from those all-time highs. AI names saw capital rotate into value and defensive sectors, right? We saw money going into value companies, defensive companies, and wherever else the money is rotating, right? You even got SpaceX, money rotated into SpaceX, right? So another thing that happened this month is SpaceX had their historic IPO, their initial public offering, meaning that this was the day that they got put onto the stock market and went public. SpaceX went public in June 2026, which raised $75 billion at 1.8 trillion valuation. So they started on the market with almost $2 trillion invested into them already. Shares on the market past $2 trillion market cap. You got space, tech, AI, and defense stocks all moved up. So that was what happened in June right there when it comes down to the stock market.
Now with the crypto space, man, we have Bitcoin hitting lows of below 60,000, hitting the $59,000 and $58,000 range for one coin, creating new support zones for Bitcoin, as well as the entirety of the crypto market being lower than, or around the lower 2.2 trillions. And the fear and the greed indicator is extremely low. We were just looking at it. I think it was like 17%, which is a great buying opportunity because the people are fearing for the market. So when people fear, they're more inclined to sell, giving us opportunities to get in at lower prices because they sold, getting in at lower prices. Now, the macro data, we have the new Fed chair. That happened. Yeah, new Fed chair, Kevin Warsh, he stepped in, taking Jerome Powell's place, and he is signaling that inflation is his highest priority, top priority, and markets are pricing and rates staying higher for longer, which is for the short-term investor, or the short-term, I guess, what traders would have a little bit more controversy, but it is favoring long-term investment and the dollar cost averaging opportunities for patient investors.
Yeah, man. When we got something like inflation being his top priority. Markets are pricing in rates staying higher for longer. Those interest rates and those interest rates staying higher for longer. Things costing more for a little bit longer. It causes the market in the short term to go down. But that's when those top companies end up going on sale because it's down. So if you're a patient investor, this is where the opportunities are made. What this means for you as a beginner. Market volatility is not a reason to wait. It is a reason to start your dollar cost averaging strategy now, like I just spoke about. So pullbacks are opportunities. When prices drop, you're getting the same asset at a discount. DCA buyers love red days, right? I'm a dollar cost average buyer. Dollar cost average buyer. I love red days. I love, like I said, Meta has been the stock that I've been buying most all year. I like when it's red. I like when it ends up hitting a low in the low 500s because I know this is a better opportunity to get this stock at a better price. And the reason why we say it's at a discount is because we know that this valuable company that has came from the high of $800 is at a low at, let's say, $600. And we know that this is a valuable company. Meta's not going anywhere in the next 10 years, right? If that's the belief and the thesis, and they're adding a lot of money to our GDP, part of the Mag 7, I'm going to love that red day, and then I'm going to love that discount because this is a quality company. Like you got a quality pair of shoes, and you end up getting them at a price than what they're really valued at. That's exactly what it's like. And think long term, man. If you hold quality assets for years, short-term volatility becomes noise. Zoom out your trading view chart, right? You go into the trading view chart like we talked about, get familiar with that, go to that daily time frame and zoom out, right? If you're holding quality assets for years, that short-term volatility, like I just talked about, Meta hitting those lows, it doesn't really matter. It's just opportunity because my horizon is going for the next 3 to 10 years, right? Even longer. So I'm giving myself so much time for this stock to go back up and recover. But if I had it just in that short time frame, let's say it was a trade, I probably would end up getting stopped out or end up losing money on my trade because I didn't give it enough time. So that's the beauty of investing in dollar cost averaging.
Yes. Now, trying to time the market is something that is extremely hard to do, and chasing that as your entry model is terrible. You're probably going to lose a lot of your money trying to find the very tops and the very bottoms. You want to regular investing over time will always be you guessing and trying to figure out when that mark or when that top or that bottom is. And so it doesn't, getting in is the best part. Not trying to get the most returns. You staying in the market for, 3 to 10, long-term vision while investing should be your top priority, right? Now, you always want to keep your cash on standby just in case stocks, gold, right, crypto, whatever it is, goes down. So you want to have a reserve so you can employ that capital into those assets. Always have a cash reserve that you would utilize to get in when those assets have pullbacks, right? When you might even just to peep the bottom hit yesterday. Now you got the money to deploy into those assets and catch that move to the upside. So always keep that cash for them entries, man. That's the best way. And this alone right here could be the outline of your DCA structure and strategy. Utilizing all four of these things here is what will get you in that game. The harder part is that risk management, or the next part. Sorry, it's not hard. The next part would be figuring how much you're gonna put into the markets. Yes. Your next steps start today, man. Download Robinhood, Coinbase. Set up your account this week. It don't take nothing but an ID. You know what I'm saying? Social Security.
Pick you one ETF, right? Start with VTI or VOO, right? Invest your first $25 to $50 and start making that a habit, man. Once you do it, you're going to feel good. You're going to feel that sense of control. There's nothing, I can't really explain it, but there's nothing like being able to know that you're controlling your future. You're controlling your life right now, right? You're getting that paper, you're getting that pay, you're getting that paycheck from the job, and you're paying yourself first, 10%. You know that I just put this work in, I deserve this, and I'm giving it to myself, right? you walk around a little bit different, man. You walk into that job with more of a purpose instead of going there with like, hey, I'm just here until hopefully something falls in my lap so I can leave. You know.
Right. Then what you can do now is create a free, emphasizing on the free. It's free. TraderView is free. Create a free TraderView account and pull up the S&P 500 chart. Pull up them individual stocks. Pull up the cryptos. Everything that you would need to do to chart up and look at the investments that you not only use, but you maybe you heard about like SpaceX or whatever. You know what I'm saying? SoFi, Netflix, whatever. Take that advantage. Take this advantage that TradingView gives you because it's free. You can put this on your phone. Take advantage. Yeah.
Now you gotta go ahead and join us in the Discord if you haven't already, man. Hit the link. Join us in the Full Circle Wealth Discord. We drop all the sauce, videos, stocks analysis, crypto analysis, everything you need to do to stay updated. But then most importantly, you got complete access to ask us any questions, share wins, learn with the community. We're showing up every day for you guys, and we want to answer these questions. And at some point, it'll be so many questions that we might not even be able to get to yours. So ask all the ones that you want now while we're here and near.
And lastly, set up a recurring monthly or weekly investment to automate your DCA, dollar cost averaging. You gotta get that set up and that structure in, man. That is such an easy task. All of these things here will take you less than 20 minutes, 10 for real. Like these are all extremely easy things to do. I'm not gonna lie, Coinbase does have a little bit of a waiting period before you invest, so Robinhood is the way to go when it comes to
Robinhood
taking
has a
that
waiting
first
period too. You gotta put your information in there and wait a little bit.
Bang. See, so regardless, all of these other four take nothing but 10 minutes of your time, man. You can set these up. Set this up to automate your dollar cost averaging structure and get your investment game rolling, man. It's only a matter of time before you start seeing those benefits, but you got to start before you even think about where you could be, man. You got to start to get a taste of what it feels like, because like Official Go Getter said, there's nothing feeling like you have conquered your day and your world when you have full control of where your finances are going, and what they're doing.
Imagine walking around knowing you got money working for you.
Okay.
Like, that's crazy. You know what I'm saying? It don't even have to be a lot either. You got money that you put up intentionally that is working for you.
Okay.
You got money to spend and working for you, and you go in and put yourself in position to get some more money. Like that's
top tier
control.
No.
Top tier control. So join Full Circle Wealth today, man. Building generational wealth one family at a time, man. And we appreciate you guys being here, man. It's the longest Wealth Wednesdays that we've had, and it was great. Great experience, great webinar. Join the Discord. We got the link in the bio in the description. Drop your questions in the chat. Drop them in the Discord, whatever it is. We are here available for you, man. Flash, what you got to say for us, man?
Full Circle Wealth, man. Tap in on all social platforms, man. We there. Join the Discord. Tap the links, man. We going live every week on Twitch on Wednesday. Today's July 1st. You have a good rest of your day, man, and start these.
Yeah.
You do at least 5 of these today. You got 5 things to do, man. Do at least 5 of them. And watch how you skyrocket, man. Full Circle Wealth.
Full Circle Wealth, man. It's your boy Go Getter.
And it's your boy Flash, man. That was your webinar. That was our webinar. Thank you for showing up.
Catch you next week, man.
We gone.